Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I have two recommendations for you, buy recommendations tonight. I will do them separately. So I want to keep these short and concise. And here we go. The recommendation tonight is to buy Marathon Oil, symbol MRO. You can see in 2021 and early 2022, the rapid increase from $10 to $32, huge move, got very overbought here. And since then, we've been working our way sideways, consolidating. And that's a sign of strength. We didn't just have a big decline. Instead, we went sideways. And in the form of a symmetrical triangle, here was the support line, here was the resistance line. And you can see we had a breakout a couple of weeks ago, 3 weeks ago, and 2 weeks ago actually had a slightly higher high, and since then we've been pulling back. I waited patiently on this breakout. This is a big pattern, 1.5 years. The bigger the pattern, normally the bigger the move and the more reliable. So a pattern like this is really attractive to me as a market technician. But when we had the breakout here, it had already had a big move and I didn't want to chase it. And we touched the overbought region on our RSI, relative strength index. So I've been patiently waiting for this to pull back a little bit, and we've gotten that over the last couple of weeks. So each one of these bars represents a week of price action. So again, what we want to look at now is just this pullback and why I waited and why I want to buy it now. But before we go there, I'm sorry. Based on this pattern, the base of the triangle projecting that upwards, you get a 4150 price projection or 51% potential upside. 51%, that's big. The volatility on something like this is nowhere near, say, a Bitcoin, which, people chase and chase and chase. Well, this has similar potential returns without the volatility of a cryptocurrency. So 51% potential upside, and our downside, I'm going to put our stop right below the confluence of moving averages at 25. So the potential downside is 9%. And so our reward to risk is a really attractive 5.5 to 1. Anything 3 to 1 or better is attractive to me. So 5.5 to 1 is a very attractive uh, potential buy recommendation. So let's look at why I didn't buy it on the breakout and the subsequent pullback and what is the opportunity is presented to us. So each one of these bars represents 2 hours. So the last chart, each bar represented a week. Here, each bar represents 2 hours. So this goes back, what does it look like? Maybe a month and a half or so. So here we were on the breakout, and you can see how overbought we were, and we had a negative divergence here on the intraday chart. And now you can see how, flashing a caution sign to us, beware a change of trend is coming on a short-term basis. And now you can see we're in our oversold zone on a short-term basis. And so I think this is a really good opportunity. I hope that makes sense. Let's take a look at the point and figure. Let's take a look at the, sorry. Let's take a look at the point and figure chart. So, my drawings of the symmetrical triangle and pattern recognition and all that. What if I'm wrong? So I always like when a point and figure chart is agreeing with me, because the point and figure chart is the purest chart of just supply and demand. There's very little subjectiveness here. So based on, here's our bullish trend line. on the point and figure chart, so that's intact. I like that prices aren't really far away from our bullish trend line. They're not way up here somewhere. And so that tells me that it's not overextended at this point in time. We also have a bullish price projection because we got a higher high here. And our price projection based on the point and figure chart is actually higher, 46. So, for me, the chart that I draw based on the symmetrical triangle was 51% upside. This is higher. If I get 40% upside, I don't care. This just is giving us landing areas, but I like when they're in agreement. So let's take a look at one more thing, relative strength. So how how is Marathon Oil going to perform versus the S&P 500 and how has it been doing? So after a huge outperformance back in 2021 and 2022, it was pretty much performing in line with the overall market. But since early 2024, with oil prices going up, you can see that Marathon Oil began to outperform again, and we got a nice support area here with the confluence of moving averages or our rainbow convergence, a la Tom McClellan, who came up with that term and that process. So I want to give him a shout out for uh, his his discovery of the confluence and the rainbow convergence. All right, so I'm recommending Marathon Oil, symbol MRO. The reward to risk is really attractive. 50, can it fail? Of course it can fail. But on a weekly chart like that, with uh, the length time it took to develop, the chances of that of it being correct and seeing a lot more upside is pretty strong. So 51% potential upside, 9% downside, reward to risk 5.5 to 1. Thank you for tuning in to Chart Built Wealth, Profitable Investing with Technical Analysis. Please subscribe and uh, like, and thank you for watching. Should be an interesting week.